All right. Hopefully that audio is better today. I know we were having some technical challenges with the audio. I'm hoping and praying that this microphone's cooperating with us today. Hope you all can hear me loud and clear. When you get on, just go ahead and say you can hear us okay. You hear me okay? Excuse me. And we're going to jump right into it. So welcome everybody. It's Friday at 1 p.m., 1:03 to be precise. Welcome to our weekly live on Fridays at 1 p.m. inside the Real Estate Investing Mastermind powered by the Growth Collective and myself, Douglas J. Beck. If we haven't had the opportunity to meet just yet, again, my name is Douglas J. Beck. I've been a real estate investor since 2014. Came out of the corporate IT and procurement industry background and bridged into real estate investing on a part-time basis initially, and have since closed hundreds of transactions in our companies and dozens of fix and flips, and also rental properties and some private money lending experience working inside of a debt fund and all kinds of cool stuff that I'm happy to share with you and my clients, and just looking forward to having a great conversation today. You'll see inside of the, thank you Noman for confirming, you'll see inside of the comments that we have a pinned comment. So make sure you pop your comment, which is a question hopefully today. Feel free to post where you're based out of and what brought you here. But obviously, let's make sure you have your questions so I can answer those for you. We're also going to cover some commonly asked questions that we've been getting from applicants for our new Growth Collective 90-day accelerator program, which you might have got an email about or got information about inside the group here on one of the posts that we have made. Man, we've been overwhelmed with the number of people that are reaching out about this. It's really, really exciting, actually, and I'm super pumped that we're helping new people join the group and get into this new 90-day accelerator program, which is just so powerful. I'm excited to share more about that with you all today and answer any questions that we have. I also have plans to hopefully have one of our friends who I might have mentioned in one of my posts that's a specialist in the foreclosure space, that's actually an expert in what he does. And he's actually trying to get into the group at the moment, I think. I'm not sure if maybe he has to get in here. Let me see if I can help him out real quick. Let's see. Need him to get the group link. So in the meantime, who do we have here with us? Let us know where you're at and what questions you have. I'm here for you guys. Today's a little bit different. We're not going to be going through any particular agenda. There's no topic or training. It's more or less for you. And I'm here for the next hour or so to assist in that regard. And there's a slight delay too, so it might take a second for you guys to actually hear even what I'm saying at the moment. And as I'm getting set up here with Lewis to get into the group here, so he's able to listen in and jump in, hopefully I can bring him on live. You guys can let us know, what got you most excited to join the group here with us, and what have you gotten so far, and what are you looking to get more of from this group? What can we do to serve you more and give you what you need? Let's see. Awesome. All right, the live's going. Lewis should be in there. I hope he's in the group. Lewis, if you can hear me okay, don't worry. You got about 20 minutes at least until we bring you up. I'm going to try to figure out how to do that. I think there's a way to, on my side, invite you up as a guest. So I'm going to work on looking at that as we're talking here. And if for some reason we can't manage to do that, we'll get a separate setup there for the conversation on the auction and foreclosures. Let me see. Interactivity. If anyone from my office is hearing me right now, if there's any way you can find out if there's a means to get Lewis invited to the actual live stream. Oh, there he is. I see Lewis right there. Let's see if I hover over Lewis. If you guys want to connect, I'm gonna pin Lewis for a second there so you could see his information. You could add him as a friend on Facebook. He's a great guy. He's got a tremendous amount of experience. He's a friend. He's been a business partner on different things, and hopefully looking to do more together in the near future and actually include a lot of what his experience is and what we offer to our clients inside the Growth Collective in a really cool way. So I'm going to hope that we can get Lewis on the live with us so we could talk. Like I said, if maybe my team could work on that while we're sitting here going through some other questions, we got about 20 minutes, 25 minutes until I think we're going to open up with Lewis. So, Lewis, you're welcome to hang out. I'm just kind of pinned your comments so people could find you and could actually go ahead and actually add you as a friend, message you, shoot you a DM, maybe talk about some of their challenges and experiences, maybe get a heads up about how you can serve them and support them. And Lewis has got some really cool stuff. He's really heavily been focused in the sheriff sale and online auction space. You guys might have seen. And then we got an overwhelming response on that one too. We put up a post about, how Hubzu and auction.com and Zome are starting to get back into motion with opportunities. I know Lewis is down there in Southwest Florida looking at stuff and sheriff sales and things. And I just know that we've done a lot of business in the past, with auction properties and foreclosure auctions and stuff. And so really, I think we need to be prepared even more now than ever, or at least not in this cycle, more than ever in this real estate cycle, because we're seeing more and more foreclosures and things are opening back up again for inventory. So, be prepared, and be prepared means connect with people that know what they're doing. I'm blessed and honored to have you guys here and serve you all in this group and help you in every way I possibly can. And one of the ways I can help you is not just with my own knowledge and experience, but by connecting you with people like Lewis, who are in my inner circle, my sphere of people that I know and trust that can really add value to what you're doing and really help you propel as a real estate investor. So Lewis and I will be doing a special training specifically for our private clients, but he's gonna be here today for any questions, and ultimately trying to get him on the live if we can, so you guys can actually have a conversation or ask questions and we can get those answered. But if nothing more, we'll have him here in the room with us, and we'll hopefully have many of you be experiencing that training as part of the Growth Collective once we get that set up. But ultimately want to get him live. So if the team does hear me, it would be awesome if you can kind of figure out if there's a way to do that. And if not, we'll park it for next time. Lewis, I appreciate you being here, man. So let's see who we got. We got Luana. What's up, Luana? How you doing? And I see Jadel. What's going on, Jadel? Looking forward to hopefully having you get joined into the program here. I know you're considering it. We had a great conversation earlier this week. And let's see, we have Marcella from Texas, and Candace and Mary Hall. JR, what's going on? Devin has a question. We'll get to that in just a second. Let's see. Ron, that's right. Excellent. Ron's not working with us. Ron is actually one of the first people I started working with from a coaching perspective about, 8 years ago or something like that. And I'm just super impressed with this guy. He's originally from New Jersey, Ron Leda. And you guys definitely want to connect with Ron if you have any wholesale opportunities, or if you're looking to get into the wholesale space. He's one of the team members working with us at JDL now, based in Florida, and really helping propel things in the wholesale front. So be sure to connect with Ron as well. What's going on, Hilda? Greetings from El Paso. We got a lot of Texas in the room right now, so that's pretty cool. Go Texas, Florida and Texas. We have a lot in common. Sherry's in Texas as well, in North Dallas, Fort Worth. What's up, Sherry? And let's see who else. I'm scrolling through my comments here. JR, what's going on? Walking through New York City's East Village as you listen in. Love it. Melissa, how you doing? Salem, Oregon in the house. All right, everybody, listen, we got a packed room. I'm excited. So check it out. I want to start with some of your questions first. I'm going to look through and see what we have in the comments. And as long as you guys continue to have questions, we're going to kind of go through all that. And then depending on what time it is, we'll wrap up with those questions, and we'll go into some things that we get as far as common questions about how it works with the 90-day accelerator, things that we've talked about on the phone with many potential clients of ours and folks that have shown interest and applied for what we offer there. So let's see. I just saw one there. Where did it go? It sounds a little bit low. All right, I'm going to move a little bit closer then. Let's see if we can get that going. All right, Devin says, I'm going to pin this comment so we can kind of track it easily. All right, Devin says, if I were to put an offer down on a deal, what's the process of finding a lender that would help me with the down payment and the rehab? Great question. So I'm going to go ahead and move this. Some people are saying the audio is a little low, so I'm going to turn the gain up a little bit if I can. Because sometimes we've been having problems with this microphone. I don't know. Hopefully today it's not too bad. The staticky or whatever. Someone said last week it had some static going on. So, and I'm going to go ahead and just do one more thing. All right. So, Devin, for you, when you're going to make an offer on a property, the process of finding a lender, so it's kind of a catch-22, right? So I think it's a good idea. My personal recommendation, and others can have different perspectives here, but my recommendation is that, really the asset is the contract when you're going into a property. When you're going to buy a property, you need to have something of value to offer to a lender or an investor or a partner, right? So you want to get that property under contract, and you want to know who to call, know who to talk to, know who to negotiate with a deal to have them come in with capital, whether that be a loan or an investment that you collaborate on somehow, which we could talk about, in a more detail, maybe in a private conversation. But fundamentally, you want to make sure you know that you have a great deal first off. And so knowing you have a great deal, that also is an outcome of a process which I call just deal analysis, right? So deal analysis, if someone from my office could please post runyournumbers.com. Runyournumbers.com is a tool that we work very closely with. We've been using it for a number of years, literally used on hundreds and hundreds of transactions to properly analyze and calculate offers and actually present those opportunities to our investors and show them the opportunity, whether they want to buy the wholesale deal or if they want to go ahead and actually jump into a deal or possibly provide a loan for the deal if it's a private money lender. So if one of my team members could just post in runyournumbers.com, so that way Devin and others can get that link and can go to that site. It's a free tool. There's no strings attached. There's a paid version available to it. I don't own the tool. We just refer business to them. We have a promo code. If you do decide to go ahead and actually get that paid version, it's actually 20% off. If you use the promo code BEST DEAL, so just like it sounds, BEST DEAL. That tool is used by all of our private coaching clients in the Growth Collective. It's like every single day, every single week, we review that inside of our hot seat discussion, which is one of a handful of meetings. We go through deal analysis using that exact tool, and our clients bring the deals in those tools, and we use that as a single source of truth to do deal analysis and figure out if the deal makes sense or not. And that's your first step, and then obviously you make an offer, right? You get the opportunity, you do the analysis, you make the offer, hopefully you get the offer accepted, you go back and forth a little bit, you get a contract. But in the middle of all that, you want to start planting seeds and having contact with people that could provide capital either as a loan or as an investor. And so I would recommend you guys could check out Real Direct Lending. RealDirectLending.com can be a means to help you sort out who those individuals are, and not really individuals, really funds. We work with funds. We don't work with individuals currently. We do have folks in our network that would be interested. A lot of folks actually, again, in our coaching program have interest in joint venturing and either bringing a deal or bringing capital or bringing experience or a combination thereof into a deal that you might have. So that's another perk of the Growth Collective as well, as we bring together people from all across the country. Some people are doing 1031 exchange. Some people are doing stuff with their HELOC. Some people are investing in self-directed IRA. Some people are just investing capital. Some people are just leveraging other people's capital. So there's a matchmaking process inside of a private group that is going on every single day, every single week for people to find each other and figure out where there's a fit. Now, with that being said, what you're talking about with the down payment and the rehab, we would otherwise call that the gap, right? The gap funds. Now, the rehab really isn't part of the gap. I'll kind of comment on that in a second. But when it comes to the down payment, right? For those of you that don't know, when you go to borrow money from what people call hard money or private money lender, institutional type, fund-based lenders, and most lenders in general do this, they'll have a certain maximum loan to value of the after repaired value specifically. We call it the LT of ARV. And also have a certain maximum of the loan to cost of the project. And what we're seeing right now in the market is that, those numbers are dialing back a little bit. They were at, let's say, 75% loan to ARV for most lenders. Now they're more like 70% in most cases. And with loan to cost, LTC, you were seeing as high as 90%. In many cases now it's 80, 85%. So it's a lot of stuff that we can't really get into right now, but based upon your experience and based upon your track record, obviously based upon your credit score, there is a personal qualification, which basically is just your credit score. There's no DTI, there's no income verification typically, there's no bank statements, no W-2s, no tax returns. That's what's called low doc loan, commercial loan, right, specifically. When you go to these kind of lenders that we have access to with Real Direct Lending, if someone could drop the realdirectlending.com link, that'd be awesome as well, please. RealDirectLending.com is essentially a concierge service to bring you the best loan products that are available in the marketplace through a process where we have a relationship with multiple funds all across the country, and we bring your deal to a handful of them and see who's got the best opportunity for you to borrow the money at the least price and also with the best terms. With that being said, though, that's just part of it, right? So you remember you're going to get 85% of what you need from a lender like that, a commercial private money lender. Now, you need the other 15%. That's probably what Devin's thinking about with the down payment, right? So, Devin, I'm seeing your comment, and I'm not seeing any other comments besides the links. That's okay. If this isn't all making sense, it's okay, too, for everybody who's listening, but you'll learn more as we talk and as we continue the conversation, either here as over the next few weeks or in private in a coaching conversation. But with Devin, the part that is the gap is basically typically it's going to be the down payment that you're not borrowing from a hard money, private money lender, plus the closing costs, plus the carry costs. And I like to also include, and I recommend my clients to do this as well, the first payment to the contractor, right? If you're doing renovations. Now, Those four things, I think there are four things, right? The down payment, the closing cost, the carry cost, and the contractor's first payment. Those would define what I would call the gap. The gap is in the monies that are not being borrowed from an institutional like lender, almost like a non-bank institutional lender, as in a fund. We have those lenders for you already lined up with realdirectlending.com, and that's something that you don't have to be a client of anything else we do. Just send us a note on realdirectlending.com. We're happy to have a conversation and get you ready to go for borrowing capital. When it comes to the gap funds, and Lewis, I'm sure, has a lot of experience with this as well, because he's done a bunch of flips, like probably hundreds, I would think, if not thousands. I don't even know how many, but lots, right? He's very active. And there's a lot of my friends that are even way more active than I've been, and just I really look up to him in a lot of ways. He's one of those people. He connected me to some key contacts not that long ago that helped us make literally hundreds of thousands of dollars in business, and I'm just thankful for him and blessed and honored to have his connection, his relationship. And we don't talk as often, but he's an expert in his right, and he's done a lot of business. So definitely somebody you want to connect with, like I said. With that being said, the gap funds, right, that part is typically found. Doug, where do I go to find? That might be what you're saying, Devin. Where do I go to find that gap funds? I think that's what you're asking me. That's typically found where you have a three-letter acronym applies, especially here. It's called KLT, right? And I'm a man of faith. I wear this not for decoration. I'm not ashamed to tell you that. So I'm strong in my faith. God, give glory to God. It's all His work. It's just my doing of like going out there and executing. But at the end of the day, the visions I have and the ideas I have and the opportunities that are created is not because of me. It's because of what's been given to me as far as blessings and opportunity that was given from above. And like I said, whether you believe the same or not, it's totally on you. I'm not here to, force you to believe anything. You can believe whatever it is, but I know that there's something bigger than me that's allowing me to do what I do, because sometimes I don't know how it's possible, right? It's just many times actually, it just gets to be, wow. But at the end of the day, I say all that because it's like not a Bible verse, right? Or a Bible type. The next three letters I'm gonna tell you, it kind of sounds like a type of a version of the Bible, but it's actually the letters KLT, right? The KLT is not a Bible type. It's actually, it could be, but it's know, like, and trust, right? Know, like, and trust. So one of my friends, my mentors, actually shared this with me recently. He's like, the best way to begin a journey or to tap into private money is through KLT first, right? So what does that mean? It means that you got to find people, Devin, and everyone else here looking to find private money partners, lenders, investors that have KLT with you. And someone's saying my volume's still not that good, so I'm going to go ahead and make it a little bit louder. How's that? Any better? Crank up the volume. Pump up the volume. It's like a 90s song or something, right? How's that? We good? I'm just going to lean in a little bit, too. Does that help? Hopefully that's a little better. We'll get the audio sorted out for next time. Hopefully it'll be a little bit louder. I'm going to assume that it's louder because I just turned the volume up, so if it's not, then there's something else going on that I can't control. You know what I mean? And I also don't want to shout because there are actually other people working. There's different offices here. So I hope that this is good. So listen, KLT, know, like, and trust. So who knows, likes, and trusts you? Think about that. If you guys could do me a favor and just kind of keep this interactive, comment. You don't need to tell me names of people. I'm talking about who is in your network. That's kind of a hint, I guess. Who in your network are people that know, like, and trust you? What types of people know, like, and trust you already? I'll give you a hint. They're not that far from you. They're not strangers. They have to know you already. And people that like you happen to be typically some of the closest people to you. So what does that mean? And who's going to trust you? People that you have some kind of relationship with, right? So people like family, friends, business associates, significant others, friends of significant other, people that are in the same vicinity of the business that you're in, right? Other friends that have other kinds of businesses that maybe you're entrepreneurial, that know you're growing a real estate investment business. Okay. Kenny Schwartz, what's going on, man? I see that's a good question too. I'm gonna get to that and appreciate the question. You guys need to connect with Ken too. Ken's up there in New Jersey. He's a developer friend of mine. He's got a lot of activity going. He's got a lot of opportunities, and he's got a tremendous amount of experience. He's somebody else you want to get to know and get to learn from as well and partner with if you can. So when it comes to KLT, and Daniel says family and friends, it's right. So closest to you, like if you drew a circle, if you put a dot in the middle and it was you, who are the people that are closest to you that know the most about you? That's where you want to start. And then as you draw those rings further out, that's where you start seeing, okay, I don't want to go to somebody who doesn't know me yet to try to go raise a bunch of money for a property. That doesn't make a lot of sense. I could get to know somebody that I don't know yet and have a conversation, have another conversation and develop a relationship and then be able to bring value. Like what our intention, part of our intention here is to bring value so we can develop a relationship and figure out where do we line up? Where does my companies really, and you and your companies, your opportunities line up, and where can we work together? How can we best collaborate? Some of those, for many of you in the room here that are newer investors, is going to be through a coaching experience, through the Growth Collective, the 90-day accelerator, which we're going to talk about today as well. Some of you, you don't necessarily need a coaching experience. You don't need to know what to do, how to do it, have someone hold you accountable, help you through the whole way, guarantee result that you're going to get a deal done in 90 days or less. That's really exciting for many of you, but that's not what everyone, if you're already doing deals, maybe you don't need that. You just need somebody that can collaborate, to help you do more, to scale up and grow. Well, part of my intention is to give you enough confidence in my ability as a real estate investor and enough resources that I can offer to you that we could collaborate like Ken and I have before and like Lewis and I have before. So, you have to figure out where do people fit into your sphere of collaboration. And like my friend David says, he calls it collaborative leveraging. So how do I collaboratively leverage, right? David's actually one of the coaches inside of our private coaching group, and he has his own coaching program, which is an excellent program. Some of you actually know David very well. And, he's just an awesome guy. He's done a tremendous amount of real estate. He's now sharing and blessing others with that information, that knowledge, that experience, those resources. And I'm honored and blessed to have him part of our group as well. And I've been coaching with his group, and we have a lot of collaboration that we're doing there. So, but he was just a connection. He was at a RIA event, right? So Devin, for you to understand this, you got to be attending or networking virtually to create connections, right? I put up a post recently about TLC, and it's not the 90s group or whatever that, 90s, I think it was 90s, TLC. It's actually about traffic, leads, and conversations. So I'm going to kind of finish this up here, and then I'm going to go to the next question we have, and then we're going to hopefully get Lewis up here if we can. I'm looking at my screen. Thanks, guys, for giving me a heads up. I'm not sure if I'll figure it out, but it might only be on the phone. It sounds like that people can join live, unfortunately. So, Lewis, if you're still here with us, I'm not sure if I'm able to do that. I'm not sure if I can go on my phone at the same time. I don't think I can. So we may have to just, unfortunately, take the questions. If you guys have questions on auction, we'll have to do a separate, sort of introductory to that or something like that. We'll take that up. I appreciate Lewis being flexible. He's here. You got to connect with Lewis Leva, right? Connect with the guy. Ask him questions directly. I'm pretty sure he'll make the time. If you have a good question, if you have something that you could bring a value to him, think about how can you add value to him. Super successful guy, willing to help, willing to have a conversation within his schedule, but probably somebody that wants to see, okay, here's somebody who's coming to me with a question, but they're actually taking it serious. Think about that, right? Think about that. He's very approachable, but just like me, we're very busy. And we have other things keeping us, focused and whatnot. So, look, private money has to do with KLT. Start with who's close to you, and then think about the value exchange. Like, what do you have? So, Devin, final thought here. If you don't have a property under contract yet, what I'd recommend is make those connections. I said TLC, traffic, leads, conversations. You don't have to have the money fully lined up yet to do the deal. That's a misnomer for sure. People used to always say, like, when you get a deal under contract, money's going to come, and that sounds kind of cliche, and it kind of is, but the real facts are, if you have enough of a deal and you have enough of a network, then you will do the deal. So why do we get so passionate about our 90-day do a deal guarantee with our coaching clients? Why am I so confident that in 90 days or less I can help you close a deal guaranteed? That there's nothing to lose. Because I know that I have people that could bring you deals. I'm one of those people with my network. And I know that I have capital partners, which is another network. Thank you, Ken. You're so kind, man. And I see that. You get me distracted, that exciting comment about the 68 townhomes. We got to look at that. Man, see what he's got? This guy's got the deal flow. He's got Ken's got connections. And Ken, I bet if we got to talk to Ken sometime. We got to get him on a guest show too, I think. He's going to tell you that his business, I bet, I'm pretty confident, and without even talking about this before, that he's built his businesses over the years, not through just like some fancy marketing thing that everyone's trying to do, like go off market and go do all these pay-per-click stuff. Like, you could try to do that stuff, but Ken is a relationship guy. He's got connections. He knows people, and that's built over decades of connections. He's got a strong Rolodex. You want to talk to somebody that's got connections, talk to this guy, Ken Schwartz. Talk to Lewis Leva. Talk to me. Talk to our company. Talk to people I'm friends with. The people that do the most business as real estate investors typically have the largest networks. Think about that. So if your network is kind of small and you wonder why your business isn't moving fast enough, it's probably because you're not connected to enough people yet. When you make connections, like I had a connection yesterday with somebody for about a 15-minute phone call we planned for, and he might be listening to this, so I just appreciate him and his time. We ended up spending like 2 hours on the phone. It was very atypical for me. Like I'm usually running to the next thing. He's usually probably doing the same thing. We just happen to both be available, right? But we had an awesome conversation. We talked about AI stuff with Chat GPT and other kind of tools. We talked about his system that he has, which we're looking at maybe offering that in some way together to bring that to people we know that could benefit from his system. It is actually a really good system. It's not a pay-per-click advertisement, transactional based type of thing. It's essentially relationship oriented, right? Relationships will make you money as a real estate investor. So Devin, final thought here is build your network of connections. Traffic yields people to see what you're doing, know what you're doing. Traffic can be conversations on the phone or text messages or emails or whatever to your network. Leads are people that say, hey, based on what you're doing, Devin, I'm interested in talking about that. I'm interested in having a conversation. I'm interested in connecting with you. I'm interested in ways we can collaborate. And then guess what? Conversations are just going to happen by default. Those leads are going to want to have conversations. Hey, please, can I have a conversation with you? What's the best way for us to talk about the thing you're doing? Because I'm really interested. Family, friends, business associates, people as entrepreneurs. Check it out. Sam just put up a comment, which I'm going to answer too. I know Sam's an experienced investor as well. If you want to connect with somebody else in New Jersey, New York area, talk to Sam. But the fact is, he's a connection, but he makes connections to get deals as well. Another guy that I know that does that because we got connected and we've done some business because of our connection. So I can't really make it any more clear that you need connections. So if you don't have a network and you're kind of afraid to build a network and you're not sure about how to do that, that's another great reason to look at having us coach you to how to build a network, which sounds so basic, but for some of you, that's what you need. You need to know how to connect properly, how to have a conversation about real estate investing, how to not be awkward and weird and have some confidence and boost it up a little bit and get going. So another great reason to get into the 90-day accelerator program that we're offering now for the first time, which has a lot of different things associated to it, which we'll get to in a little bit. And I feel bad because Lewis was so ready and eager and he's such a good dude, ready to have a conversation. I'm ready for him to have a conversation and talk about auctions, and I can't get him on the actual meeting, unfortunately. That's why I'm telling my team we need to probably do this on Zoom, I think, that we can then broadcast into the group for that reason. So he and I could be right next to each other on Zoom, and we can still broadcast this as a live. If you guys like that concept, and then, have some other people come in from time to time on Zoom, let me know. Tell me that you like Zoom. If you want Zoom next time, put Zoom as a comment. If you think that Facebook Live is good, just put FB or something like that. Let's do a quick survey who's here. If you like Zoom more, to have that be where we could bring people up live with me as we want to and need to, put Zoom as a comment so I can hear it and see that. If you like Facebook, just to be Facebook, which is kind of passive conversation, whatever, then put FB. All right. Devin, appreciate you. Looking forward to talking real soon. Hey, make sure you apply for the Growth Collective 90-day accelerator if that's something you think will bring value. I'm pretty confident that it will. In fact, I know it will. And we're putting our money where our mouth is, so to speak, and guaranteeing that you're going to get to that 90 days or less. Otherwise, we'll keep working with you for free. So, all right, excellent. What's up? I see Tony. I see Hilda. You guys are all saying Zoom. Excellent. Sherry, Jose. All right. It's pretty obvious that people want Zoom. So here's what I would say, though, right? So to be fair, we have folks that are just in listen only mode. Obviously, everybody here now is listening only, and I appreciate you being here and setting aside some time together with me. The fact is, listening is great, but participating is even better. And I got to give priority to people, number one, that are guests. Lewis will be a guest for us in the relatively near future. I know he will because we're going to make that happen. And I appreciate his willingness to make that happen. Number two, that's going to be on Zoom, but that's going to be him inside the Zoom. And then some of you in this group will just still be in listen only. But if you want to kind of get into the Zoom, right? And this was not planned. It's just having a conversation here. There's going to be some kind of barrier to get inside the Zoom. We don't know what that is yet, but I'm going to talk to my team and figure out what that is. We're going to obviously have our clients available to join Zoom, or actual paid coaching clients inside of Zoom. We might offer some incentive for those of you that are looking at, possibly joining us inside the Zoom. I'm not sure yet, but more to come on that. So my team that's here, if you guys could take a note of that, we'll figure out how to get the logistics set up for Zoom and how to have Zoom be for those that are maybe inside our circle that are already part of our community of clients and or guests. And then we'll just have you guys that are not yet there, for whatever reason, it's fine, listen in, but we'll have it broadcast into the group. Is that fair? I think that's fair. I hope that's fair. All right. Good. All right. Zoom. Everybody Zoom. Man, look at that. Imagine, I remember Zoom was just getting started. What is Zoom? Zoom.us? This is ridiculous. And now it's like controls the whole world with like videos. Like it's like everywhere. It's like almost weird not to use Zoom. It's like a monopoly. I know there's Teams too, but there's also GoToMeeting, but those are like old school, I feel like, you know? Let's see. So Ken asked a question. Kenny Schwartz, let me see where he's at originally. Let's see. I see your other comments here. Ken asked about subordination. Would you have funding if I had if I have a property subordinated? And the answer is maybe. So a lot of lenders don't like subordination, right? They don't like to be second or first, or they don't want to be another party in the transaction. They want to be the only one. But depending upon the structure, that's kind of more an advanced question, which I'm happy to discuss with you, Ken, and or have my team that does the funding side of what we do look at that together. I would say let's have a private conversation about that. But for most of the group here, just to kind of give it a general response, so you know what we're talking about, is that when loans are made against property, main like construction lenders and people that provide the majority of the capital want to have what's called a first position mortgage, a first lien priority, so that if there's something that goes wrong with that loan, they have the right to pull back and get the property as collateral. A second position or subordinate loan would have the second priority to that first one. A lot of first position lenders don't want any second positions recorded or available or anything like that, because they don't want to have the issue of like people, more than one group trying to collect on a default or on a collateral, whatever, like the process to basically collateralize the property. And Lewis actually, coincidentally, could probably talk better on this than I can. He's got experience in the sheriff sale space and the auction space with probably just everything we're talking about on the side of when it doesn't go right, like dealing with the assets that are foreclosed on, basically, with the property. So the answer is maybe that we'd have funding available for certain scenarios, but that's like a very uncommon structure. It's not that it's impossible. What might be worth considering is just coming up with a joint venture structure, Ken, with the person that's coming in. If there's a subordinate, like a second, quote unquote second, have a joint venture or a partnership with that individual to either be a partner on the property or to be a private lender that has a loan made against your LLC or your property, but not recorded as a mortgage. So there's different structures you can look at. And again, check with your counsel. This is all just like my experience talking, no financial legal advice, whole disclaimer you guys should know by now. But yeah, I know Ken for a little while, so I think we could work that out together somehow. All right, excellent question. Ken's got some opportunities. Check him out as well. Lewis is here still. Lewis, if you want to share any links about information that you have or a thing that someone could see, like kind of more about you, if you have a website you like to share, or you want people just to follow you on Facebook, whatever's the best way. I just want to give you the opportunity to kind of promote a little bit, to share your story. And I apologize you can't come live right now. I wanted to do that with a live conversation, but if you have something you could drop as a link or a resource, that'd be perfect. And if not, we'll catch you on the next one when we get you in actually the Zoom. Then Sam Shimon. Let's see, I can't pin that one for some reason. It's responding to Mo's. So Sam says, if the mortgage interest rate is at 7% and you put 30%, how do you make money buying a 5 cap property with no upside, just triple net lease commercial building with one tenant? The answer is you probably don't make money. I mean, that sounds crazy, right? But you probably don't. I know that in the commercial, my limited experience with commercial, friends of mine that do a lot of commercial, in fact, Ryan, I'm connected to Ryan. If you guys don't know Ryan, he was coaching with us for a while. I worked with him on some different things. He worked with us. He's an awesome guy. If you're looking for commercial financing on larger assets, like triple net lease type property, commercial assets, I can connect you to him. He does commercial financing for like a decade. He's a friend of mine. He has his own group. He does mastermind groups, stuff like that. He basically would tell you, he would tell you that just wouldn't make sense financially. And other people I know that do commercial, like down here in Florida, the rule of thumb, I'd say, is what I heard at least, is that I don't do like self-storage. I don't do triple net lease type properties, but I know what they are. I'm familiar. I have friends of mine that have strip malls and things like that. So the rule of thumb, though, is that typically you want to have a cap that's two points more than what your cost of capital is, 2 percentage points more at minimum. So if your interest rate's 7%, you're not going to make a lot of cash flow or any cash flow at 5%. You're going to lose money most likely. Now, I didn't do the math of your 30% down, how much is your leverage, what's your loan, how big is your loan, how many years amortized, all that kind of stuff. There's multiple variables. So like with lending, you have loan amount, right? You have interest rate, you have the amortization schedule, and you also have the term. So a quick crash course on that, like the loan amount's going to be 70% in this case of whatever he's buying the property for. So let's say he's buying it for $1 million. I can't do a screen share. If I could, or if I knew how to do it quickly, I would. But if you guys go to Google and you type in on Google mortgage calculator, right? And it will basically right on the top of Google, it'll bring up a mortgage calculator. So you can kind of follow along. And I'll just do the math because I think I could do this. All right, mortgage calculator. So if I go and say my loan amount is $700,000, and let's say I'm getting a 30-year fix, which, by the way, commercials usually on a 20 to 25-year amortization schedule, but you get 30-year fixed in certain scenarios. Let's just say for simple math, 30 years to kind of keep it easy, relevant to most people, 7% interest rate. My monthly payment for a $700,000 loan at 30-year fixed, 30-year M, with 7% should be around $46.57 based on my calcs. So $46.57 would be the debt service, what is called debt service. When we go to look to buy properties with long-term financing, whether you go into a bank, a credit union, or a private lending institution, they're going to ask you, they're going to ask you for the rent roll, they're going to ask you for the T12, trailing 12, they're going to ask you for what the income projections look like, what are the expenses on this property, they're going to find all that stuff out. A bunch more questions, but the fact is, you're going to see a scenario where your payment of $46.57, in most cases, you have to have at least 1.0 DSCR, which means I have to be bringing in net operating income of a minimum of $46.57 for this property to even be underwritten as a loan that could be made at that level. The thing with that is it produces zero income at that point. There's no cash flow. So a lot of lenders want to see 1.2, 1.25, 1.3. They're getting more and more conservative with those minimum DSCRs, which is basically a certain percentage on top of what you're paying on a debt service basis to have the cash flow. They want to see a spread, 20 to 30% spread. Let's call it 25%. So how do I figure that out? Well, if I get a calculator out, and you guys got to follow along on your own or just track this down. If I have a debt service, a payment of $46.57, for example, that's going to be the denominator. So I'm going to take that, and I'm basically going to say roughly about multiplying that, $46.57 times 1.25, means that I need to have a net operating income on that property. For me to cash flow 25%, I had to have a net operating income of a minimum of $58.21 based on my math. Now, I could double check that and say 58.21.25 divided by 46.57 is 1.25. So that basically means my DSCR, my debt service coverage ratio, I'll say it one more time, debt service coverage ratio is 1.25. 1.25 means that I have 25% free cash flow. I'm assuming that there's no vacancy. There's probably vacancy factored in when you go to get a loan. I'm just doing it simple, quick. A lot of lenders don't factor in property management, although some of them do when you get larger assets. Property management, this is a triple net lease, so basically he has no expenses. It's the tenant is paying everything. So that's something that, I'm not that familiar with actually making loans from a debt fund on, because they did mostly non-commercial like that. They do commercial loans. The groups that I work with, most of them do commercial loans on residential assets or multifamily, or mixed use also, but not just pure commercial triple net. So I can definitely help you out though, as far as looking at options there, Sam, but I don't think you're gonna make a lot of money or any money, at least cash flow. Now, why would someone do that anyway though? Let's think about that for a second. Why would somebody, are you guys following, is this kind of making sense? If you guys want me to recap DSCR, or if you're curious about DSCR, just put in DSCR. If you want to go a little bit deeper, if you want to say, what's that DSCR thing about? What does that mean? DSCR, by the way, is the closest thing to true hard money. And I'll explain what I mean by that in a minute. But 30% down, right? So let's say on that $1 million asset, if he had $300,000 down, what Sam wants to know is what's going to be his cash on cash return. He should be thinking about that. What's my cash on cash return? The cap rate is basically comparing, cap rate's different. It's comparing net operating income to the total cost of the project, or the capitalization, the cost of that property acquisition and renovation, whatever he's doing. People calculate it slightly different depending if they want to include just hard costs or soft costs, I should say, really. A lot of times just purchase price or purchase and reno if there's reno. Now, with this, 30% down though, 30% down is $300,000. So let's say, for example, that somehow Sam was able to pull $30,000 cash flow on this property that he's going to buy. He's putting 30% down, getting a 7% mortgage, and he's got this triple net lease, and he's got a 5 cap. However that works out, I don't know, but let's just say he did. $30,000 a year on $300,000 of an investment is very simple math. It's 10% cash on cash. I would say that if I'm Sam, he's probably excited about that, because that's really good to have 30% equity. Return on the equity, return on the cash on cash is pretty decent. high single digits, low double digits is what I know people look for when they look at these kind of assets, especially triple net lease, because triple net lease is very low maintenance as everything's on the tenant. But again, this is not the common thing that most of the group here is looking at. So I want to just contextualize that most of you are looking at residential, and that's okay. The graduation, if you would, or the opportunity there is to move into commercial. You should definitely talk to Sam about that. Obviously, he's got some experience, and he might be willing to share resources or talk about ideas of how you can collaborate. But the fact is, there's commercial loans available for commercial assets. There's commercial loans available for residential assets. There's obviously residential loans available for residential assets. The thing is, and I'm going to bridge over to some questions about the coaching because I think we need to cover some of those too. I hope you guys get the gist of some of these things and some of the concepts that these are detailed discussions that we cover in depth inside of our coaching, but I'm giving you the high level review of it in a sort of a conversation here or presentation, whatever you want to call it. The fact is that like you're going to have residential loans. They're what's called full doc. When you go to conventional loans, full doc means you have to go show all your statements, your tax returns, your bank statements, your W-2s, your income verification, your DTI. All those things matter for conventional. Whereas low doc means low document, would be more like a commercial loan. It doesn't require most of what I just said. The main thing it requires, and that's why I said DSCR has to do with hard money, because DSCR is going to use your credit score and your what's called personal guarantee, your PG, on the loan. Now, your PG on the loan is going to be your personal guarantee saying that this property, thank you, Sam, appreciate that. This property, okay, sorry, I'm just looking at the comments here. Yeah, I don't know how to unpin and pin. That's I'll have to just pause on that, but thank you for the suggestion. This property that I'm going out there to get and going to buy, if I want to get a commercial loan, well, I can get a commercial loan that's predominantly focused on the income of the property. See, hard money, and if Lewis is still here, I know he's got experience with this as well, and probably most of the folks here that are experienced know what I'm talking about. Hard money, why is it called hard? It's called hard because it was against the asset. It was the income of the asset that produces the return and the comfort and the safety and the collateral, if you would, for the lender. Because if a loan needs, let's say, debt service of $5,000 a month, and if the asset produces $7,000 a month, there's $2,000 of cash flow. So the lender says, I'll make the loan. You don't have to give me anything really. Just give me the fact that the property is the collateral. And as long as the property is an income-producing property, the hard money loan would be against the income-producing property. The $7,000 income would offset the $5,000 of debt service, and the $2,000 would be kept by the operator, the owner, and then they're happy, and then the lender's happy. But when we get into renovating properties, when we get into building properties, when we get into even long-term 30-year mortgage notes for commercial lending mortgage notes that are for residential assets and even commercial assets, a lot of times there's what's called personal guarantees, which means that it's a recourse loan. Okay, recourse basically means that they could have your personal financial as recourse to collect, just like a bank would, to go back and collect the asset or collect your assets from, other than that, one individual house. Why am I saying all this? Because when we're asking about hard money, there really isn't hard money unless you're buying multifamily property that has income production already going on. That's true hard money, the way it's defined by what the hard money was created as in the beginning of what hard money even means. The asset is the collateral, but actually what some people call it is soft money, or private money is more common, because it's not about just the asset when you go and take a construction loan. It's actually about the operator's ability to produce the result which is favorable, and also to have the stability financially to carry that project to completion. So the lender is going to want to make sure that the property makes sense. So if you go to Real Direct Lending, any of the lenders that we work with are going to make sure that the property deal makes sense. There's financial viability. You want to have your runyournumbers.com report ready or something like that to show here's how the property makes sense. Then they're going to say, okay, great, the deal makes sense. How about you? Do you have decent enough credit? Is your credit above? Usually 600, 620 is like the lowest you're going to see most of the time for most lenders. Some are more, more risk taking, I guess you would say. But most of them are going to say 620 or up, and then they're going to say, what about your experience, right? And what about your reserves? So they're going to ask these questions. Anyway, we can go on a whole thing about that. We have inside this group, there should be a guide section on the top. If you guys don't know about this, there's a guide section that has a lot of content. Check out the funding, Dealmaker Challenge funding presentation that we talked about, a lot of the funding concepts, and you'll get to see like how that all works and kind of some more details. All right. We have a bunch of questions here. I'm going to do my best to answer them. Posting questions right in the comments, and I'll go for another 15 to 20 minutes after if you guys want to hang. I'm fine with that because I know you're here, you want to learn, you want to do. Let's just check to make sure there's nobody else between. Ken's got those opportunities. Make sure you talk to him. Sam, we talked about. Perfect. You're welcome, Devin. I see Nathaniel. A bunch of Zoom comments. Hilda says that's fair. And then Zoom with the code, probably. Yep. Either is good for Astana. Marcella says Zoom. Lewis says no worries. Appreciate you, man. And then Sherry was suggesting pinning one comment. So I'm going to go ahead and try to pin Tony. Tony's a buddy of mine from college. All right, so Tony's been in my network for quite a while, and somebody that I KLT and he KLTs, hopefully, right? Like we're friends, right? We're college buddies. We grew up together basically in college. Like we became men, if you would, in college. Right? We've gone on to grow families now, which is amazing. But I've known Tony for a while, so Tony and I are talking about real estate stuff all the time, different things, and also just life. But Tony says, where do you think the market is going? Rates are still high, likely to increase, but the prices of houses are still pretty high too. Not dropping as quick or as much as I hoped. Where do you see it in 6 months from now or 12? That's a loaded question. Tony, I've talked to you about some of this, probably in private, but I'll share what I believe based on what I know now, and I'm happy to have anyone else here who's knowledgeable in the market. I know Lewis for sure monitors this stuff, and keep me honest here. Number one is, I'll start off like this. When someone says the market, it's like kind of a pet peeve. It's not, I'm mad at Tony because it's normal. It's normal for him to say that, but it's just like when we say the market is too broad. Like we're saying the market represents like what, the whole world's economy, like the world's economic situation, or is it the U.S., or is it the U.S.'s real estate situation? Is it lending space? Is it what economic factor? What commodities? Is it the stock market? Is it mutual funds, bonds? I know he's talking about the real estate market. I know that. But I'm saying when you say the market, there's multiple things economically that could be happening in any given market or time in the market across multiple different types of assets and different things that are being traded. Real estate happens to be one of the things that's traded. So the market, when I look at the real estate market, I want to say, let me segment the market into areas, right? Specific areas, like as in micro markets, as in towns or counties or neighborhoods or parts of states, or states maybe. The greatest level will be state level. Like, if we're looking at the U.S. real estate market, you could see some places like in the middle of nowhere that are not trading any property, that are in rural America, which are beautiful places and awesome, but they're not going to accelerate in their appreciation anytime soon because there's just not enough people buying properties and trading properties there. You have other places like that are super densely populated, like parts of Newark, New Jersey, for example, or East Orange or Irvington, where we've done a lot of transactions that are very densely populated. Metro markets, right? Tampa's probably one of those. Orlando, like, parts of Florida, I would say. Any metro market, an MSA as they call it, is going to have density, population density. Where there's population density, there's going to be more trades of property. So what does that mean for us? It means that when there's more trades, you will see shifts up or shifts down faster typically. And that's not my comment, that's not my opinion, that's just facts. It's statistics basically. If the market is in the real estate pressure or the mortgage interest rates pressure is higher or greater, higher or lower I should say, right? And greater or less, I guess you could say, you're going to see, and it's also hard on your wallet, like Lewis says, yes. And I love the fact that somebody pinned that comment. So yeah, if there's any good comments, feel free to pin those. If anyone's watching, if they're able to do that, that's awesome. Fact is though, like Lewis, I'm pretty sure would agree that like when you see things, I'll give you guys an example. When we see markets that have a high cash purchase percentage, that's a very interesting metric that I've learned about since I moved to Florida. I never really thought about it, but then people in these meetings, my RIA meetings, which by the way, you should be at RIA meetings every month if you can get to them, or as often as they have them. Plug into the network, meet people, like get their business cards, learn who they are, ask them questions. How can you add value? Anyway, cash purchase percentage, right? Sarasota County, Manatee County, cash purchase percentage, it's a tongue twister, is north of 50% across all types of assets, not just like distressed assets. So generally speaking, that's where it's been. And so what does that mean? It means that it's somewhat agnostic to the interest rates going up or down. So it means that the buying power, the affordability index, if you would, of people buying property in certain markets like Sarasota County and Manatee County, Florida, and other parts of the country, probably where Lewis is at down there. Was that Collier? Is it Collier County or Lee County? I'm not sure, but it's probably that vicinity. Those are also high percentage cash purchase. Why? Well, because people typically move capital from some other part of the country as in they retire or they become, wealthy or rich, and they move enough to where they can move and live in a place and be comfortable and buy stuff for cash and retire and relax and, slow down. So a lot of times you have, impact there as far as cash purchase percentage. So what does that mean for us? Well, we say, where do I think there's more stability? Personally, my opinion, this is my opinion, when I think about where to invest time and money, I say I want to go places that there's already stability or will be more stability in the future, not where there's less stability. So if I see a lot of trades happening, as in the highly densely populated areas, I'm not personally looking to acquire real estate there right now. I'm not. Now you could, and that's fine. But see, that to me is riskier. And if I see areas that are highly densely populated, it's also because I don't really want to trade property in areas that are highly financed, which happen to be some of the same neighborhoods. And what I mean is you'll see like a lot of cash buyer activity, yes, in the Newarks and East Orange and New Jersey or other MSAs, other metro markets, but you'll also have a lot of people that are owner occupants, which are end buyers if we're selling a flip, that are leveraging financing. What do I mean? Well, they're going to go and get an FHA mortgage for 97 to 100% if they get assistance, down payment assistance programs. And if they're getting FHA, for example, and it's no judgment, this is not a political statement, this is not a judgmental, discriminatory, nothing like that. Facebook, please, I'm not taking a position that it's bad. It's just that I know that this is the facts of stats. Like this is statistically, if you have a high amount of leverage, you have then the reliance on that money being available at a certain number or not. Are you guys with me? Does this make sense? Like if I need to get 100% financing and if the money gets higher and now my debt to income ratio cannot support that higher cost of financing, then I cannot buy. And what does that do economically? It pushes me out of the market in that pricing band. Therefore, I can't buy property as an end user if I'm using 100% financing with conventional mortgages, which are now through the roof as far as interest rates go, comparatively speaking to what they've been. So when rates went really low, what do we see? Buying power increased. When buying power increased, what does that affect? It doesn't affect the supply as much. It could indirectly, but it directly impacts the demand in economic terms. The demand pool of the buying power is affected and it diminishes in those markets that are highly leveraged. So if I say, where is there stability? Stability is going to be, in my opinion, and what I think is based on stats, and I happen to be a stats guy in college and stuff like that. I'm big on analytical stuff. I believe stability is in high cash percentage markets that have, average-ish trading of property, not like a tremendous amount of density. So suburban America that has high cash percentage is a safe place to buy property in my book. Now, if you're planning on owning property for your rest of your life, can you still buy in the urban markets? Will you still get great deals? Yeah, there's a thing called like dollar cost averaging, for example, where maybe you own other property and all of a sudden the market starts going down. You're like, man, I got to catch it. I'm not going to catch a falling knife, as they say. That's the saying. You don't want to catch the falling knife. But if you're planning on holding real estate, a lot of my friends that have massive portfolios are like excited about the properties in those markets because they're going to get them for less. And now they look at their whole portfolio, what they bought a couple of years ago or the past year, and the market's risen, and they got multifamily properties. Now when those markets go down, they can average out their total cost of ownership per door to a lower level, and then they own the property for the lifetime. They're not planning on selling. They might trade out, do a 1031 exchange, whatever it is. I hope this is kind of making sense. If it's not making sense, it's okay. This is where I get into what's called awareness versus understanding. So you don't have to understand everything I'm saying. The intention is not for you to be like, all right, I came into that thing with Doug and team on Friday and I just got all the way I need. I'm out there. I'm going to make it happen. Like that's kind of not going to really happen in this kind of space. It just is difficult. You could try. If you're already in the business, you can. But if you're like just getting information, like you're going to have a lot of stuff that you're not even aware of yet that you haven't thought about. And that's another reason, respectfully, like to look at like what anybody offers, what we offer with any sort of coaching or educational services, because you need to get educated first. Then you need to focus on implementation. So we serve this group here, this group of over 3,500 people, which is a blessing and growing, with information, education, and trying to pour as much value into this group with content like we're talking about today and perspective. So thank you for a great question, Tony. And also thank you guys for being here. But the thing is, we do this because we care about education. But see, a lot of education is readily available at your fingertips. You just have to look for it, okay? What's difficult is implementation. Okay, let's bridge over to some of the common questions that I get for a moment. And then there might be some other questions. I apologize. We'll come back to those in a second. That I get about the Growth Collective or the coaching concepts, right? Like, why does somebody hire a coach in the first place? What are you looking for? Like, what is coaching? Like, these are questions that I get all the time. Well, what coaching isn't, it's not a course, okay? If you want a course, I can help you with that. We have a section in our coaching groups that are called Your First 30 Days. Your first 30 days is literally your first 30 days as a real estate investor to know step by step what to do, how to find deals, how to analyze deals, how to negotiate deals, how to enter into contract, how to get them closed, how to do funding, how to borrow capital, how to raise money privately through your network of people you already know, not go out there and solicit the whole world. That's a different animal. That's a whole thing. That's a whole nother course that we don't have, that we're not going to have probably. You have to figure that out, or maybe talk to somebody who does that for a living. But if you want to do some project, purchasing some properties, purchase some rentals, right? You need to know the basics, back to basics. So your first 30 days is literally step by step, day 1, day 2, day 3, day 4. Do these things. It's an accountability check as well. Check the box. You did it. You watched the video. You took took the action. You did the task. You completed the task, etc. What else after that? Well, after your first 30 days, now we're also getting coached in the first 30 days. So you're going to have myself with you a couple times, 2-3 times a week, plus a number of other coaches, a handful, like probably 3 or 4 other coaches right now in the program, in the Growth Collective, coaching you and people like you all across the country, and actually in Canada too. And I got some exciting news. If you're in Canada and you wanted to do something with us and you couldn't get third-party capital sourced for like the engagement to work with us, we now have the ability to fund third-party funding in Canada as well. So if you're in Canada and want to go to the next level in real estate investing and want to have us help you do that with the growth, we have that available. So that's exciting. But anywhere in the United States, you can get third-party. What does that mean? Third-party. Like, what if I don't have the money? This is going to take time and money, period. Now, let's break down the money for a second, because that's important. And if we can unpin the comment just to kind of keep it, I'm going to do that right there. Okay. Thank you, Lewis, again for being here, but I'm going to get to Jonathan in a little bit, I promise. If we need capital for real estate investment, right, how do we source capital? We can source capital from lenders. I told you there's a whole video about this, by the way, inside this group for free. You can check it out. There's no strings attached. It's there. But I'll tell you the shorthand version, summary version, right? Lenders, private money lenders, as in institutional private money lenders as in people I know, love, and trust, or like and trust, they like and trust me. And or private money investors come into deals and participate in deals and get a profit share incentive or some type of equity participation. People that you know, like, and trust well can do that. And I could just have my own capital too, right? So I can do a blend of all that stuff. But what's third party look like? Third party means I'm leveraging other people's capital, other people's money. So that's going to be funds, as in groups of investors that have put money together and started a fund. Real direct lending has capital sources like that available at your fingertips, literally. Okay. Sorry, Wendy, I haven't been hiding. I promise. We got to talk about that too. I just found that out today, I think. Wendy's up in Canada, if you guys don't know. Wendy's got a property under contract. She's got a lot more coming soon. So she's an excellent resource for anybody who's in Canada and who wants to also learn from somebody who just got started not that long ago, and she's already having massive success inside the Growth Collective, and it's all because of her. She's been ushered along by us in some ways, but she's taken action. I give her a lot of credit. She's a very, very humble woman, a very faithful woman, a very awesome person, but also at the same time, she's making some things happen now. So I'm excited for her. So, Wendy, we got to talk about the third-party funding for sure. Now, third-party funding, to be clear, Wendy, I don't mean to, rain on your parade or whatever, but third-party funding in terms of not so much for I don't yet have third-party funding for real estate deals. I'm talking about third-party funding as in coming into a coaching engagement, because some people are like, well, I don't have the X dollars it takes to be part of this, to invest into the program. Like, I can't do it. Well, we have a third-party capital source that will do it in all the United States and Canada now as well. So with real estate deals, though, to go back to that, you want to think about how to leverage, but how to leverage properly and strategically. You don't want to over leverage. You don't want to under leverage necessarily. So that's another conversation we can have in a coaching engagement. But I have the resources of people and funds that you can get connected to that make it happen for you. Now, that's the OPM part of it for real estate deals. So anybody that's looking for capital, yes, we can help. RealDirectLending.com and contact me, and I might have contacts, friends of mine, people inside the group also, inside the Growth Collective. There's a lot of folks that are looking to joint venture, collaborate, do deals with you that are already in the program. They're already in the coaching experience with us, the Growth Collective. It's a collective of all different kinds of experience levels, not just brand new, not just really experienced. Some people in the middle, some people literally brand new, a lot of folks. Other people that are just hitting out the park already. Like Ryan, was coaching with us. He's got like almost 1,000 units under management I saw last. That's pretty impressive stuff. This guy is just amazing dude and keeps on going. And David's coach David, he's just like, he owns like a ranch out in New Mexico. He's an awesome guy. He's a faith guy. Like, he's really powerful and strong in his spirit. And he's also like just willing to give. And he coaches, but he's looking to acquire another, who knows how many hundreds of units in the near future here. So he's got a plan. He's picking up portfolios of property. Like, these people are within reach. Like, they're right there saying, hey, I'm here to help you. Come on, let's get to work. And I'm one of them, right? I'm leading the charge with the team, but it's really thanks to them and thanks to others that have helped make it happen. So When it comes to third-party funding, so let's talk about first off the investment just in a general sense. Yes, people ask, hey, Doug, well, I want to do the coaching. Can we just like join? Like, how do I sign up? Well, first off, thank you. You're here. You're present. You're focused. You're excited. You want to do some stuff together. You want to take action. You feel like you're qualified. Beautiful. We'd love the opportunity to work with you. It is an application process. So the first thing is let's have a conversation. Reason being is because it's not just about money. It's not even just about time. It's about the right fit. We have a certain culture in the Growth Collective that we strongly want to nourish and take care of and not have anybody come in for the wrong reasons. This is not a get rich quick kind of thing. This is not a come in and just try to do it all yourself and like tell everybody get lost and get out of my way, step over everybody. It's not the kind of business that we run. We want to work in collaboration and kind of work together. It's a team feel. Even though you're in your own business, we have a little ecosystem, if you would, of people that want to work together. So that's one of the things to consider. It's not just about the time or the money. Now the time, common question comes up, how much time should I dedicate? Well, we have on a given week, we have between 6 to 8 hours of group sessions available. Group sessions, like it's not like a Zoom presentation or Facebook presentation. We're talking about you come into a Zoom meeting and you're one of maybe 5 to 10, 20 people, depending on who's there that day, that comes in with questions, gets answers, comes in with stories and scenarios, and hears stories and scenarios, talks about deal flow, talks about analysis, holds you accountable, shares visions, shares ideas, brings deals. There's people that bring deals to meetings and say, hey, I got this deal, I'm looking for a partner, that kind of thing. Who here thinks they could benefit from some of that? Like, I mean, you guys look in the JV, put the letters JV if you want a joint venture with people that I'm actually actively coaching all across the country. If you think you could benefit from that, just write JV, and we'll know that you're serious about collaboration. If that's something you want to do, you want to collaborate, you want to do more together, not by yourself, then just put the letters JV in the chat. I'll know that that's somebody that we want to definitely talk with. So it's like this, right? When I first started, those of you that don't know, I invested into an awesome program that was really an educational program, but it was awesome. It got me my start. And it was almost $30,000 of an investment, right? And really what that program was, with all due respect, and whoever's here that might know about that program or know specifically that program itself, like the guys that run that and the guys I worked with were awesome people, and they still are, and they're still doing amazing things. But what I realized was that was really a course and some technology on steroids, which is awesome, and that's great. And people have a lot of awesome content and a lot of awesome information. But what was lacking, what I felt like was lacking, was number one, the localized knowledge. So I started off coaching in 2015. If you don't know that about me, I started locally. I started my first handful of clients, and I was coaching one-to-one back in 2015. So I've been doing this for almost a decade as far as coaching real estate investors specifically, not just like people that just want to do something in business, like, hey, you have an idea, let's go get to work. No, real estate investors that want to wholesale, quick flip, that want to fix and flip, that want to buy and hold, that want to learn how to passively invest, that want to grow portfolios. Those are the kind of people that I've been working with for almost a decade. And we've got people that have literally retired themselves. There's multiple clients of mine that I'll remain nameless here because I don't have their permission right this instant, that have retired themselves from anything else that they were doing. People that worked regular, quote unquote, blue collar jobs that have now gone on to build multiple seven figure businesses. And I'm proud to tell you that those are people I've worked with one-to-one, hand in hand over the years. And people that have done just a few deals, and people that built portfolios and gotten a part-time income on the side, no big deal. But some people's lives have literally been changed financially, like massively. Like people in New Jersey, people in New York, people in Florida, all across the country. Soon to be Hawaii, Texas. We already have clients that are just working on some amazing things. Pennsylvania, like really cool stories. But you could check all that out. We'll share how to do that at some point with, like, if you want to know who's who and stuff like that and kind of see it firsthand. Canada, Wendy's up there in Canada. I can't forget about my Canadian friends, right? Just messing with you, Wendy, sorry. That wasn't a good joke, was it? So I started off in this educational thing, but I realized I was missing the connections, the people. So what I realized was over the years, as I was coaching, trying to make those connections, letting me be one of those connections for my clients, right? Being available to my clients to have the opportunity to talk about deals and collaboration and joint venturing, the JV comment, right? So we did our first 20 or so wholesale flips by joint venturing with other wholesale companies, including some of my clients. And then I said, wait a second, if my clients are able to do this for me, why can't I just do this for other investors that are already doing it on scale? Let's just create a system around this. We did that, and then we've grown to now we've done well over a couple hundred wholesale flips, and we've done about 50 fix and flips. And we've raised a bunch of money through our network because we knew how to do that with the people that we already knew from wholesaling and people that we were already fixing and flipping. So it's just like this ecosystem was built. But the moral of the story is this, that you don't usually want just if you have someone you're looking at as an opportunity to work with, whether it's us or somebody else, just make sure you understand that you probably don't just need education. Most people don't just want only to get educated. That's why people are questioning the need for college. Like they're saying you have to go to college just to get an education, to get a degree. Nowadays, probably not really required with the internet the way it is, with technology moving as fast as it is, with kind of the way the day and age is. You don't really need to go to college anymore. You could, we don't have to. It's going to be more of an experience, right? So, but what do you get from college if you don't get an education, or if you don't need the education? You also get connections, like my buddy Tony, who's here. Great connection, great guy, great family man, great business person, awesome guy, just a cool dude. Like, we've been in touch since college, and I wouldn't have known him if it wasn't for college. So I did get a great connection with him and other people I've known from since then from college. So this is an example, like that community, right? You want to have a community. So we have communities of paid coaching clients that come in to invest in themselves and come into a community to do a couple of different things, to network, to learn, but also to collaborate, right? So it's not just about content. That's the thing. Content's one of the first things people think about. I just need content. I need information. I need to learn. Yes, learn. But you know what the best thing comes from? The best experience comes from collaboration. And connections is what yields the possibility for collaboration. So again, I'm imploring you all, please, whether it's with us or somebody else, find a way to collaborate and connect with people in a community that's available to you, which it is through the Growth Collective and the 90-Day Accelerator Program, a community that's beyond just a conversation like we're having here. It's inside of a private community that meets regularly throughout the week. Like, think of it like you get into your group. Like, this is like the people that you trust every week, every day practically, to have Monday through Thursday. We have scheduled meetings, and then Friday we have this meeting. We have also special guests and stuff that we're doing on Fridays. And then we're available literally like 24/7. Like, you have a private Slack, private communication channel inside of a thing called Slack that you can message me with audio messages. I send audio messages. My clients that are here can tell you that I'm pretty responsive with that stuff. I have a staff that helps me manage that too, to make sure you're getting the attention you need. If I miss something for whatever reason, I'm there. Boom. It's me, myself, Doug himself, not like somebody else. I mean, there are other coaches, yes. But I take personal responsibility in helping you have the best chance for success because I actually care. And not saying that other people don't, but there are a lot of people that don't care. You may not know that yet, and I hate to break the news, but there's a lot of people in the real estate business that just really don't care about you. They care about themselves. And I know that the people that are put in JV are not those people, because I know some of the names. I can tell you that they are not those people by the people I know. But also because that probably says that, hey, if you're willing to raise your hand, put in a public format inside of a private community here, but still publicly to the people listening, that you're looking to JV, that means you're of the collaborative, the abundance mindset. And that means a lot to me. That means more than you know. Because if nothing more, we're going to find a way to collaborate in some way, shape, or form, hopefully, God willing, in the future. Hopefully, maybe right now, it's something where you see the benefit of coaching. Now, what does coaching actually look like? Coaching looks like you come in at whatever experience level you're in. And if you want to have, an experience of getting to your first deal, well, guess what? We have a 90-day do-a-deal guarantee. How does that work, Doug? A 90-day do-a-deal guarantee. So you're saying I could come in with no experience and you're guaranteeing I'll close my first deal in 90 days or less. Yes, here's the question, or the thing that comes up at the end, though, the little asterisk, right? You have to be willing to put in the work, which we give you the meetings to attend. We give you the steps to follow. We give you the accountability. We give you the support. We give you the strategies. We give you the resources of the capital providers, the loans that are available to you, the deal flow, where to go get the deals, where to connect, who to connect to. We sometimes even give you the connections. You have to be willing to take the risk, though. You have to be willing to jump in. And the thing is, I can't control whether or not you take action. So that part of it is a little tricky. But here's the thing. Whether you don't take enough action or you do is really on you. But my commitment is that if for whatever reason you don't close a deal in your first 90 days, for whatever reason, if it's up to you, even if you made a mistake, you didn't do what you needed to do, you have my word personally, as Douglas J. Beck here, your leader, your head coach, your founder of the Growth Collective, the guy that cares about your success, that you're going to have my support personally as long as it takes to get you your first deal closed. And even after that, check it out. You'll have my support and my camaraderie, my excitement for you. All we ask is that when you close that first deal, that you just celebrate it and you share a testimonial with the group. That's all we ask in exchange. For that support, you said the signs, I'm going to have a testimonial to tell the rest of that these guys know that it works. I know these guys know what they're doing. I know that other people need to know these guys. So I'm just willing to share a testimonial in whatever capacity, whether it be a written testimonial, a video testimonial, an audio, whatever it is. Is that fair? Do you guys think that that's fair? Like that you could have a guarantee that you're going to get to a deal closing in 90 days or less, as long as you want to write a testimonial about it. Is that cool? I hope that makes sense. I'm going to wait for a second and I'm going to kind of gather my next thought here for you. Okay. Excellent. Nathaniel says, sign me up. Awesome. Excellent. So here's the other stipulation, right? And I'm sure other people are going to comment, but I just got to keep going because of the time and stuff. Tilda, thank you. The other stipulation is the fact that, Sherry says, more than fair. Excellent. I can't help everybody do every kind of deal. So if you're looking to do like a strip center that's fully vacant or needs to be built from the ground up, I could probably help you. But if you're trying to do that in 90 days, it's not going to happen. Not with me or not with anybody else. If you're trying to build a tower, I'm using ridiculous examples on purpose because some people have these ideas and it's great. If you want to have what someone told me was this basket park, and it's no disrespect, but I just so left field. Like somebody I know that reached out to me when I was inside the debt fund was saying like, hey, can you guys fund my vision for like this theme park about all the baskets in the world and how it's going to be all the history about basket making and stuff like that. I swear, this is not made up. And there's somebody out there that's going to do it. It's somewhere in the Midwest and they needed like tens of millions of dollars. Like I can't help you close that deal really. So I'm not going to be able to help you do that. I'm sorry, but you could do it. If you really want it that bad, you could do it. You could do whatever you put your mind to, whatever you allow God to work through you on, But what I will help you do is I'll help you do a couple of different things. I can help you acquire your first rental real estate property. Does anybody here want a rental? Just type the word rental if that's what you want. You want to buy your first rental in 90 days or less. If that's something you want, let me know. Type the word rental. Rental. Number 2, I can help you understand how to buy a property that you could fix up and sell. But check it out. We're going to buy it in 90 days. We're not going to be able to sell. We're not going to be able to sell it in 90 days. We're going to be able to buy it in 90 days. Is that fair? I think that's fair. Yeah, and it is more like a non-for-profit probably. You're right, Brenda. Good point. I don't know. I'm not knocking the guy. At the end of the day, there's something to it. I don't know. Maybe it's a big business. It's very niche. You never know. Number 2, fix and flip. Number 3, wholesale. Our good old friend wholesale. Check this out. It's not impossible to do a wholesale deal in 90 days, but if you're trying to find an off-market seller, these are the steps that people try to do sometimes, and I have to cut in and say, wait, this is too much. You're overcomplicating stuff here. And some of my clients, they know I got nothing but love, but this is some of the things that are going on that we're trying to coach through right now with some of the clients. If I want to go upstream to find off-market sellers that don't want to sell their house that I'm trying to market to and contact without them asking me to contact them, that already is a battle in of itself. 98%, 99% probably are not going to even want to talk to you. So if I'm going to do that, I don't believe you could do that with no experience to do that with $0 or very low investment of marketing dollars to do that and get that even where you have a seller under contract within 3 months because it's such an uphill battle, especially with limited time. So Doug, what are you saying is the best way? Well, here's the best way. Here's how I coach wholesale. Okay, get your pen and paper ready for this one. If you guys want to buy, by the way, if you want to buy a flip, let me know flip. I forgot to tell you that. If you want to do flips, let us know in a comment that you want to get into fix and flip, okay? And you can also put in BRRRR. That's kind of like a hybrid between, fix and flip, but it's fix and hold is BRRRR, right? BRRR. So buy, renovate, rent, refi. If that's what you want to do, put in BRRRR. But check it out. On the wholesale side, I know we're over time, guys, and for those of you that are upset about that, I apologize. I hope this is helpful. I'm here for you. I'm not here for me, I promise. I'm trying to help, pour value into you all and help you understand this. If you want to get into wholesale, I will help you do the deal that I did a few months back, the kind of deal that I did, which I call a joint venture wholesale or collaborative wholesale, if you want to call it that. Here's what I mean. How about you sit in a room or you're in a Facebook group or you're with somebody that that has a deal that's off market or that is on market, whatever it is. It's a great deal though. They've already got it under contract. And it's how I did my first deal. If you guys missed the training I did a few weeks back about how I did my first deal and how we've done hundreds of deals since the same way, it was through the collaborative wholesale, the joint venture wholesale. So, hey man, that guy's a builder as well down here in Sarasota. So just what's up to him. If you guys want to do collaborative wholesale, what does that look like? Well, I had somebody present the deal in a physical room in Sarasota. And they might be listening to this, and I got nothing but love, and I'm not going to call her out their name because it's not fair and I didn't ask their permission. But somebody presented a deal in a room in Sarasota, right? I'm sitting in a room. I said, interesting. That's like about an hour and a half south. It's down in Fort Myers area, right? And that's about an hour and 15, hour and a half south. I said, I happen to know somebody who's down that way that's looking to buy a property like this person's presenting. So what did I say? I said, wait a second, I better listen because I could hear this and I can get into a contract, a special kind of contract called an option contract, and I can get this thing with an option to buy it, not a requirement to buy it, or I can go into contract with a small inspection period, which is what I coach on how to do all this stuff and how to get into contract the right way to have the ability to navigate and stuff. And I could just basically get into an option or get into an agreement where I have the right to cancel if I can't perform under these circumstances with an inspection, whatever it is. Okay, so I said that, and I said, I know these other people, and I'm sitting in the room with my phone like this, right? I'm seeing a presentation about a deal, and I say, I know there's like at least 4 people on my phone that I could text right now that would give me a quick yes or a no. So how did I get there? I knew those people because I was willing to have conversations about their interest in buying deals. So if you're willing to have conversations, even if it's social media, and I even have a solution if you're not willing to have conversations, which is another conversation for another day, but we have a done-for-you process, which is even easier, but the fact is that's a pretty significant investment. So let's just talk about today for a minute. If you want to have a couple conversations, you want to sit in a room and listen to deals be presented, and then you're willing to have a conversation with people that want to invest into those deals. If you're willing to do those 2 things, and you're willing to follow some steps, as in get the right paperwork together, I can help you wholesale a deal for $10,000 to $20,000 or more in a 90-day period or less, and I can probably help you do a couple of those, if not more, with very little experience. But you have to be willing to put yourself in the place. And here's what I mean. I sent out 4 text messages, and some of you have heard the story a couple times now if you've been around me. 4 text messages to these 4 individuals that would buy deals in that area that was an hour and a half south. 2 of the people said, I'm interested right away. 1 guy said he's not interested, and 1 guy didn't get back to me until the next day, so he kind of got an afterthought, and it's nothing against him. But the 1 guy, I'm going to keep him nameless for now. Let's call him S. S, hey, I'm interested. I like this area. I could do the construction. I happen to build properties. I also happen to be in the real estate business. Besides just building, I also have my license and things like that. I have a lot of, and I know this area very well. Can we get a contract on the property? I said, well, let me go talk to the people. Now, what am I doing? In some people's minds, you might say, well, Doug, are you brokering a deal right now? Like, is that what you're doing? Well, wait a second. Let's just take the monkey out. What do they say? The elephant in the room? Brokering without a license, right? And I'm going to put my name out there saying this, that there's no brokering without a license unless you actually are representing or acting as a fiduciary to somebody else. My understanding of the law says that if I'm representing someone's interests, if I'm facilitating the transaction on behalf of somebody else with no rights legally to do so, if I don't have a license to do that, that is potentially an issue. But in the states that I know the laws about, which happens to be New Jersey, Florida, and a few other states that I've done business in, and I know clients who do business in, you don't have to have a license to negotiate a real estate deal, right? So what did I do? I negotiated the deal with my buyer before I go and negotiate with my seller, okay? I go to my seller and I say, I want an option contract because my guy who I'm going to sell that property to when I'm done, or that contract to, is going to buy it from me, and I want to buy it first from you. I sign a contract as my company buying the property or buying the rights to that property. That's what I do when I do an option agreement, okay? This is like powerful nuggets like that you guys might not get with any kind of education. So this is like the crux. I'm glad you stayed. I'm giving you the bonus content. I'm sorry Lewis wasn't able to present, but this is something that he can also talk on because I know he's probably done similar types of things because of who he is. And he also happens to be an agent, a broker, right? So he has the experience on both sides of it. But you just trust me on this. Like, I go and make an offer to the people in the room. I got an investor partner, because check it out, wholesaling to me is not an exit strategy. It's a partnership strategy. What does that mean, Doug? S was my partner for about an hour. What happened was I got a contract on the property for, let's say, $210. S says, you know what, Doug? I'll just call him Sam. It's not the Sam here, but Sam. That sounds weird saying S. Sam says, hey, I want to buy the property. Would you mind if I just bought you out of the deal? Like, what if I just took over? I say, you know what, Sam? It's about an hour and a half away from me. I really don't want to get into another fix and flip right now. I'll sell you the deal for 10 grand. Oh, 10 grand? I can make like 80 or 100 grand. You sure that's right? You want just 10K? Like, literally, that's what he kind of said to me. And he meant it. Like, he was trying to be a reasonable person. I'm like, yeah, 10 grand. It's your deal. We'll close in 2 weeks. Let's sign me up. Okay, boom, get a contract. Seller side gives me a contract, option contract. I sign it, I execute the option. I say, I want this. I'll close in 30 days or less. I take that contract and I assign that contract to the Sam guy for $10,000 more. And guess what? 2 weeks less, I get a wire for $10,000 in my bank account. Well, my company's bank account, but I own the company. So if you want to do deals like that, like cutting through all the noise and literally just being a connector and knowing how to execute negotiations and contracts, then I can help you do that in 90 days. I could probably help you do that in like 30 days if you're willing to put in the work. So if anyone's willing to do wholesale that way just put in the word wholesale. So I know that that's kind of what you're thinking about. I know it's not the exact, hey, let's go get off-market sellers and go negotiate deals with people that don't want to sell and hope that they say yes, and they say all these choice words and screw you, get lost. And I'm hoping I get a contract for the right price, and then if I try to negotiate, they tell me, oh, make me an offer, and I just spend all this time circling. No. I can count on my hand the number of times that I've gone direct to seller to get off-market deals. That's a bunch of noise, and there's some people that do really good, but they are beasts when it comes to negotiations, and they're beasts when it comes to spending money on marketing in like a way that I'm not willing to be that way personally. I don't want to deal with a lot of rejection. I don't think anybody really wants to get rejected, and we know it's a nature of the beast, so to speak, nature of the business. But is it really what you want? Do you want to have people telling you, no, you're crazy, get lost? Stop talking to me every single day, day after day, day after day. That's why, I hate to say it, but a lot of these folks hire third parties to do that outbound, which is cold calling and texting and all this other stuff, because they don't want to deal with the emotional distress it brings a lot to get rejected like that every day. I give a lot of credit to my virtual team members that have done that in the past. Folks listening to this that have done that for a living. Telemarketing, cold calling, text blasts, all that stuff, man. There's a lot of churn, and it's hard. Versus, hey, they already got the deal in the contract. Excellent. You've taken the time. You deserve to get paid what you're asking as long as the deal makes sense. I'm happy to pay you that as a wholesale integrator or a wholesale aggregator or a joint venture wholesaler. I like integrator and aggregator personally. That's what I call, like when I represent myself in front of a group of people like you guys, JDL Ventures is a wholesale aggregation company or wholesale aggregator. What that basically means, I get deals from 50 or 100 different people in a certain market. I take the top 5 or 6 and I enter into an option contract when I know I have reliably an investor that's going to take over that option when I sell that to them. And then we make 10, 15, 20 grand. Sometimes the biggest deal we've done today was $140,000 on a wholesale flip. And I shared that story not that long ago either. And that was a partnership between 3 people. So, all right. I covered a lot of stuff. I'm over time as it is. I got to calm down a little bit. I guess I'm getting too excited. I see that there's people that want to wholesale. Awesome, Kayla, Hilda, I see you there. Antonio says he has a condo for sale in New York, just needs some repairs, dropped it from 285, would consider a cash offer, A or B 320. That's a little tight. I mean, I'm not saying it's bad, but that might be a good rental for somebody, someone who's in New York. Antonio, if you want to share what location that's in, that's not really a flip, I guess, right? Just some repairs, kind of get it cleaned up, get a tenant put in place. I would want to know if there's any sort of short-term rental, mid-term rental available, whatever you can do there. If it's long-term, share some details. Feel free to post that in the chat. If people are listening to that, that's fine. I know that Sam's out there in New York, so you might want to connect with Sam. He might be a conduit connection or even the buyer. And then Nathaniel said he just had a deal in Sarasota. Sadly fell through. I could send you the info freely. The guy is sick of the property, open to financing. Sure, let's talk about it. I love that. And Jenny's also interested. Jenny's a buyer too. Her and her husband are doing some amazing things. Looking forward to hopefully working with them in some ways as well. Yep. Okay, let's see here. Brenda says rental, minimal burr. Got it. Excellent. Hilda says flip and burr. They want to do it all. Jenny wants to do it all. Excellent. Heather, flips and burr. Lewis, burr. Excellent. Hilda, rental. I know Lewis has done a lot of flips. He's probably like me. He's probably like, man, I just want to start buying some rental property, making it, building it or renovating it to keep it and just build massive wealth over the next, 20, 30 years of our life just until, we don't want to do it anymore, which might not ever happen actually, but who knows. And then let's see. Multifamily rental. Heather says yes. Rental down. Excellent. You guys are all pretty much on track here, so that's excellent. Glenn wants a wholesale. Perfect. So check it out. So what's the next step? What's the next step? That's the question I get a lot. So what do we do next? Well, first off, thank you again for investing the time with me here today. Thank you for taking time out of your Friday afternoon. It's almost a weekend. Some people already started their weekend. But for many of you, just kind of finishing your work day, you're like, all right, I'm here. Doug's just keep on going. I'm listening, but are we almost done? Like, what's going on? And everybody was like, well, let's get going. Like, let's get to work. Like, who is ready to get to work? I think you guys are, it sounds like a lot of you here are like ready to roll. Like, let's just do this. The way it works is like this. Up until this point, everything that I offered as far as coaching and inside the Growth Collective has been a hybrid of one-on-one coaching, like scheduled one-on-one sessions and group sessions. And here's the challenge, that there's only one of me and there's one of my other coach and other coach, but the thing is, there's only so much time that each of us has to do one-on-ones. So one of the biggest challenges has been, how do we scale this out to help more people in this community and other people outside this community to learn how we can help them and do it in a way that's just as effective. Now check this out. Remember, very important outcome. 90 days or less, a guarantee of a close, or otherwise we'll work with you for free until you do. And even after that, all I ask for you to stay in the program, you can stay in it as long as you want. That's a gotcha that is actually on my side, but all you have to do is do a testimonial. If you're willing to do a testimonial, you have my word, you could stay in the Growth Collective forever. Think about that. You have a private group, a one-time investment, which I'm not going to tell the amount here because if you think I am, it's not necessary. Trust me. It's such a small number compared to what you probably think it is. A one-time investment that has a multiple to it over the course of the rest of however long you decide to invest. If you want to know that number, we could have a conversation. It's not about pitching a number and saying, let's go sign up at the back of the room kind of thing. The number is much smaller. It's mid four figures. I'll give you a range so you understand. It's not 5, 8, whatever, not 8, but like, it's not crazy, like $100,000, you're going to get this amazing thing, or like $60,000 or $30,000 or some number like that. No. It's mid four figures, right? But why is it that? It's because you're investing in yourself and you're trusting the process. When you go to buy real estate, we have to put down what's called an earnest money deposit, okay? An earnest money deposit. What does that look like? Well, an earnest money deposit is money that's going to be put towards the real estate purchase, okay? The earnest money deposit is put towards the real estate purchase. It applies to the actual purchase of the property. Well, if it applies to the purchase of the property, then is it an expense or is it an investment? Well, it's an investment into the property. So if it's an investment into the property, do I lose it? I'm asking you guys this question. Ask me the question. I mean, answer that question for me. Am I losing an earnest money deposit? I'm going to wait a second as you guys are listening to me. Do I lose that? How can I lose the earnest money deposit? Not at all. You aren't. No. Well, and you guys are right, but I'll tell you how you ought to be careful, though. Sorry, I'm just checking my phone because I got some messages here. Make sure I'm not missing anything. It's 2:30 almost. It's okay. No, you won't lose it unless you do something you're not supposed to do. Like if you break the contract, as in you don't follow the steps, if you don't perform. Now, performance can be inferred as I had to close, yes. But you could also perform as in I don't close, but I navigate out of the contracts. I've also helped a lot of my clients navigate out of bad deals. Navigating out of bad deals. Do you get that? Like, what's a bad deal? Well, there's a million bad deals you can make. But the fact is, if I want to navigate through it, I need to have what's called an inspection period or some type of contingency. All right. Check this out. An earnest money deposit typically in real estate deals is equivalent to 1 to 5, maybe 10% of the purchase price. Depending on what the source of the deal is, depending on what's going on, depending on all these different factors. Well, the fact is that that's going to be applied towards the purchase, okay? I could lose that money if I send that money to title or escrow. I could lose that money if I don't perform, I don't close, if I don't honor the contract. That money is at risk. But if I honor the contract, if I move forward and make a good decision to stay in the deal and proceed to invest in that property, well, I don't lose that money. That's not an expense. That's an investment because it's part of the purchase price. So when I go get a loan, they're going to say at my title company, they're going to show me, here's how much money you put down, and here's basically how much money's left to pay still. So if I put money down, well then it's just going towards the purchase, right? It's going towards the purchase. So if it's going towards the purchase, it's not a loss. The deposit is very important. So if you guys don't have money to put down as deposits, don't worry. There's ways around that. There's actually people that will lend earnest money deposits. There's people that will give you the money. I'm not one of them, but there's people out there that will lend you the money. We have multiple people that will do that. Multiple people in our network that will actually lend earnest money deposits. So if that's something you're thinking about, well, Doug, I'd love to do this, but I don't have enough money to do an earnest money deposit, even to buy the property and investment, then that's something that you want to know is there's somebody out there that will do that for you if the deal makes sense. Now they're going to ask for something in exchange. They're going to ask for either a return on that money. They're going to ask for equity. They're going to ask for something. But they're still willing to do it though, okay? And so the fact is that basically what it comes down to is you're going to buy this property. You're going to, whether you're wholesaling, fixing and flipping, buying and holding, whatever you're doing, you're going to buy the property. You guys need to understand, you need to become buyers of real estate. You cannot just transactionally think of yourself as, oh, I'm just providing this wholesale thing. I'm just doing this quick flip and I'm not actually buying. No, you have to think and operate like a buyer. We all must be buyers. Because that's what's required for you to take what you are buying and ultimately sell it, either after you close on it or sell it as the contract. You could sell the contract rights, okay? Now, If you don't sell the contract rights, what can you? You can close using OPM, other people's money. Okay. If you get other people's money, how much is it going to cost for that? Well, we don't really. It depends. It depends on your scenario. Just like I said before, it's low doc. It's not high doc or full doc. Low doc meaning you're going to have a decent credit. So if you guys have above, let's say 600 credit, then right off the bat, I could tell you that 80 to 85% of the money you need to buy real estate is already available to you with a non-conventional, as in private money lending institution that's available at your fingertips. So you already took away 80, 85. So now what do I focus on? I focus on the rest, 15 to 20%. 15 to 20%, that's what we talked before about the gap funds, right? The gap funds. Now, the gap funds are going to be the amount for the down payment, the carry cost, the closing cost, and the first payment for the contractor, like I said before. That money can also be raised. Raised basically means I'm going to find it in my network. I'm going to find it in this group called the Growth Collective. There's people that want to do those deals. I happen to be one of them. Just right now, I have monies invested in different things in my own projects and in my business to a point where I don't have right now at this moment interest on doing a JV personally, but I've done them many times before, and I will look at doing them again. And if I can't do it myself, I know somebody that will. And there's clients of ours in the program at the moment that are doing it actively, like as in right now on deals. So people are the answer. Who do you know, not what do you know? I will help you with the what you need to know. I will show you the process. I see Rich is here too. He's part of the Growth Collective. I hope he doesn't mind me saying that. He's doing some amazing things. He's got a lot of stuff, a lot of success on its way. He's got properties he's looking at. He's got a great deal he's working on right now. He's relentless. Perseverant. These are things you must be. So people ask me, well, what's it going to take besides some time and some money to do this? Yeah, like Antonio says, you got to have some experience to get to 90% LTV, 100% rehab, 100% purchase. That's pretty good, Rich. Now, I'm not going to go on a tangent, but I'll say this much, though. Unfortunately, there's some bad cats in the game here that will say, they're going to do private money for you and charge you 3% for the rest of your life and up till the next 50 years of your life, and they're going to do 100%. Not saying that that's who Rich knows, but that's potentially an email that you might have gotten. There's people all across the world trying to scam people with giving private money, and what they do is they collect your personal information. I know because they've had me try. I've tried to do it to see what was going to go on, to know what's happening, and they want me to give them my social. They want me to give them my bank information to send me money. I'm not going to do that because you don't have a real website and things like that. So you got to be careful. There's a lot of scammers, literally scammers in all parts of the world saying they're going to lend capital that don't have any money to lend. They're just trying to collect your personal. So that's very, very dangerous. Be careful with that. But the moral of the story is anything worthwhile that I've ever done in business requires a combination of time, some money or access to money, execution on a strategy, which strategy comes first, execution comes next, and then accountability to know that I'm doing it correctly and that it's on track. And if it's not, how do I course correct? And that's pretty much everything that we give you with the Growth Collective. We give you the time together that you need, the coaching, the support, the content, the community, the connections of people in the group. We give you the capital. As far as real direct lending is concerned, you get priority access to that capital. There's some really cool stuff in the works that I can't share yet, but powerful things on the capital side that's like so ready, almost ready, but not there yet type of thing. That's going to change it for the folks in the Growth Collective big time. Like not have to worry about capital, period. There's also the plan, the strategy. What is the strategy? Well, we help you define that together as a group, as a coach. I coach you, the coaches coach you, you help refine that strategy. You come up with a plan to execute. And then check it out, execution. So you have to do that part. We're going to tell you what you need to do. We're going to help you do it. I'll get on the phone if I need to negotiate something with you and somebody else, a real estate agent, a wholesaler, a deal provider, whatever it is, a person that has interest in partnering up with you that doesn't know how to do that right. I'm willing to jump in. Put me in, coach, put coach in. You know, if you need me, that's what I'm there for. I just told one of our clients this morning that like he got what I was saying. I know he did because you said it, but the fact is, if he needs me further, I'm one step away. You just got to send me an audio message on Slack or a text message on Slack, and I'm there. Because I want to see him be successful. Because when he's successful, we're successful. When we're successful, he's successful. You see me? It's mutual. So whatever. All this stuff just to say the fact that accountability. Okay. Accountability. You say you're going to go do something, go get it done. Has it been done yet? If it didn't get done, why not? Can I help you get it done? What's the challenge? What's your next step? Are you gonna be able to get done what you think you're gonna get done? Where do you feel like there's a problem or challenge? Where can we solve that? Those are the kind of questions we have in accountability conversations. Those are kind of the questions we have in our one-on-one dialogue. You'll have unlimited, and clients are here too, they can tell you, unlimited one-on-one support. Yes, you won't have, in this case of the 90-day accelerator, you won't have any one-on-one time scheduled with me, but you'll have unlimited support in the groups. I mean, is 6 or 7 hours a week enough time? I think it's more than enough time for many, if not everybody. For most, right? Is unlimited one-on-one support enough support? I believe so. Okay. Is the connections in the group and the coaching in the group and the collaboration opportunities enough? I believe so. So what's the next step? The next step is to have a conversation. The next step is that I'm going to drop a link for you to submit your deposit. If you want to submit a deposit, you don't have to, but if you want to lock in a spot, we have 6 spots right now, 6 physical spots, because this is like a beta for us in the sense that we've never done, well, I shouldn't say never, in the growth collective model with this meeting structure and the guarantee that we're offering, we haven't done a group only offer like this ever before. It's not just some marketing thing. It's like literally what has never been done before. And it's okay, because like, we're going to give you the one-on-one support, but it's going to be at a lower investment for you to get started than ever before also. And my existing clients know that we pour value and they're not losing anything. They're just getting more people to connect with. So they're getting a win when you join because they're going to know they have someone else who is a sidekick, a buddy, or someone else they can have an accountability partner with, or they can have somebody they can collaborate with that's going to join the group and it's going to bring value by just doing stuff, by taking action. So if you're an action taker and you're ready to lock in one of those 6 spots, I'm going to drop a link in a second. That link is going to show you a seat deposit form. The seat deposit form doesn't have a lot of stuff on it. It literally just says, here's the form, here's the name of the group, and here's the amount that you're going to commit to paying. And it's not even a payment, it's an investment, like I said, but you are making a payment to be real. You're putting a commitment, a financial commitment to lock your spot in. The seat deposit form is going to fill out very quickly. It has an email, it says credit card, it says expiry, it's all secure. It's not going to me personally. It's going to my website. It's going through a secure process. If you have a question, you don't feel comfortable doing it, then let's have a phone call first. That's going to hold your spot. That seat deposit is going to go towards any program that we offer now or in the future. So it's never going to be an expense for you. But it's going to be an investment into the 90-day accelerator program today for you. It's a first step. The second step is for us to have a messenger conversation or a phone conversation to take care of the rest. And that's something we could do in the next couple hours. I just gotta make sure my time today allows for that. And I have a couple folks in my office that could do that with you. Again, I don't want you all to feel like this is a pressure thing. It's just that there's only 6 spots, literally, because we're doing a beta test with these folks in this group. We wanna make sure we get you the success and have the celebration of success in 90 days or less. And if we don't, we might not ever do this again. It's gonna be a much bigger commitment. The amount that you're gonna see in that form is a portion of what it's gonna take to be invested into the program. If for whatever reason you're not accepted into the program, that money will be given back to you. It's holding your spot. It's a deposit. It's a refundable deposit. The reason being is because I want to have a physical phone call with you myself today or very soon, as in like today or tomorrow, to know that by Monday we can get the rest taken care of what it's going to be, which I'll tell you in a second. Some of you are here still like wondering what it is. And if we can't, I'm going to give you an option, and if you can't take care of that option, then we're just going to have to find another way in the future maybe, or apply that to something else. The seat deposit is $2,500, $2,500. The seat deposit holds your spot. Now, the group-only offer that we have has a pay-in-full option, which we'll talk about in a second. It also has a 2-pay option, 2 payments, not 2-pay like on your head, 2 payments. And it has a 3-payment option. I'm telling you that right now so you know that they exist, because people ask that question all the time. Well, how can I finance this if it's something I want to do and I just can't come up with all the money? I'm really excited, but I just can't do this. Remember, there's a 90-day do-a-deal guarantee, first off. That's very important. Remember that. That's very, very important. Okay. If you can't find the rest of the monies, which I'll talk about in a second, in either the full pay, the 2-payment, or the 3-payment, we have third-party funding available. Remember I said before, there's third-party funding available that will literally finance 100% of it. The only stipulation is that we ask for you to first submit a seat deposit So we see that you're committed to the program today. So we know we're going to hold your spot. Once you go and apply for that third-party funding, they're going to tell you how to get qualified. It doesn't take very long. It takes like a day or two to get indication. Yes, I can do it. No, I can't. And it's a soft credit pull. And in that mode of getting qualified, they're going to tell you, hey, this is what your interest rate would look like, and this is the amount that your payment's going to be like. Your payment will be hundreds of dollars a month or less. Like it's going to be hundreds, like a couple hundred, 200 to 300 for this level of a financial investment, assuming that you get approved, which the approval rate is very high. Like if you're above 600 credit and you have some kind of job working or you have someone in your family that's working, you have a very high approval rate. So this is literally for you a couple $100 a month of a payment for potentially the massive change in financial for your life and your family's future as a real estate investor to get going and get it to the next level. So this is like pretty low barrier to entry, right? Now, if you just want to knock it out, if you just want to pay the whole thing in full, then it's going to be for the pay in full option, right? If you guys are taking notes or listening, it's $6,800 for the pay in full option. I want to let you know that my team might be upset with me that I didn't just say that on a one-to-one phone call because I'm telling it to the whole group. But you know what? I just feel like the people that are still here after about an hour and 40 minutes might want to know what to do next to take action so they can lock in one of those 6 spots because it's Friday afternoon after all. We want to make sure we get this done if it's something you want to do. I could tell you that we have programs right now that are basically 4 times the amount of an investment, but they're way different in the sense that they have a lot of one-on-one time, which some people need an excessive amount. Not that they need it, because they want it, they deserve it. They desire that one-on-one focus. And so know that there's a range, right? This is the first time we've ever offered it like this. If you see that there's a need to have that one-on-one, then let's have a conversation. The $2,500 would still go towards that engagement. So if you want to have one-on-ones for the next 90 days every week, that's an option. It's a different program. We're not going to talk about that today. If you want to have one-on-ones for the next year every week, that's a program. I kind of gave you directionally what it's going to be. Why is that? Well, because I have very limited time at the moment. I'm serving probably about 15 or so, maybe 20 one-on-one clients on almost a weekly basis. It's a lot of commitment of time for me, and I love doing that. I really do. Anybody that knows me knows that it's my passion to serve. But I only have so much time personally available. So I will be with you in the group every single week, 2 to 3 times a week, consistently, every week. Unless, God forbid, I'm sick or I can't make it for whatever reason. So you're not losing out by coming in for the $6,800 deal. If you decide to go for the 2-payment option, it's going to be a little bit more because we're helping finance that. It's the first payment. It's going to be $3,650, which you take away the $2,500, whatever that difference is. You come up with that difference next week or over the weekend. And then the rest of it's $3,650 a month from now. If you decide to go the 3-payment option, it's going to be $7,800 total. It's going to be 3 payments of $2,600. Check it out. I'll make it easier. It's just $2,500, and the next payment won't be due until next month, which will come up with whatever that difference is, 27 or 26, whatever it ends up being. It's not so much about the dollar amounts, just to getting you guys started, getting you committed. There's a lot of people in this group that have been like browsing and looking around and trying to make things happen. They're just not able to take action because there hasn't been an opportunity for somebody that actually cares like I do, like my company does, like our group does, to get you where you want to go and get you there fast as possible. Systematically, step by step, holding your hand and embracing your challenges and helping you solve those challenges and figure out what to do and be successful. So with that being said, I'm going to drop the link now, and I'm going to wait a minute. I'm going to see if there's any questions. And I know we're way over time, and this is not planned, but it just is what it is. So I'm just putting it there. All right, and that link should work just fine if anyone wants to go ahead. If you guys want to celebrate that you got a seat deposit made, if this is for you, throw that into the comments. I'll wait a couple minutes if there's any questions. If you don't want to tell people, that's okay too. I don't really, there's no need to do either way, but I just want to let you know you could for sure tell if you want and don't tell if you don't. I'm excited for the next 6 people that take me up on this though, and I know we have a few thousand here, so more than likely at some point in the next 24 hours, this is going to be gone and taken care of. And there's also people we've been talking with all week about different things. So there's people that have already applied and had conversations, and really this is like the last chance for this offer at the moment because we're doing a beta test, right? We're trying to see that you all can get this in 90 days or less, and we're committing to work with you no matter what. So you're not losing anything. But we're putting our neck on the line and saying, hey, we're going to commit ourselves for however long it takes to get you to that next deal. So you really, there's no other way to slice it. It's a kind of a no-brainer if you need this, if it's what you want. We're here for you. You've seen the value that we've been given every week, week after week, consistently. This is going to persist. We're going to continue to pour value into you in this group. But imagine having this kind of conversation about deal stuff and actually being interactive 5 to 7 times a week, every week, almost every day if you needed it. You don't have to, but if you need it, it's there. Having that resource available to you, that's pretty powerful. I didn't have that. I had my local network of investors that were around me kind of circling, trying to find deals and stuff, trying to do deals, but they weren't all like, hey, with arms wide open, ready to help me. My buddy John, he was the man. Like, he helped me get my first deal done. I told that story a couple weeks ago. People like him, they're not many of them that exist out there. There's not many Johns in this world that were willing to like, hey, let's collaborate when you have no experience. All you think you have is an idea to help me bring this opportunity through a process that I'm not that familiar with, to go bring it to a network of people that I don't know yet to hopefully get this deal closed. Like, he took a shot. And then we went on to do about 12.5 whatever deals. And then I did that with some other groups up in New Jersey, and just told you a story before about one in Florida. So that's just on the wholesale side, not to mention the fix and flip. You want to make 50 grand, 100 grand, 200 grand net? I'm not telling you this to brag. I'm just telling you guys, we just went into contract on a property for almost $10 million yesterday. One single property. And I'm telling you that because I have to take risks every day. And to me, that's a massive risk to take. The deposit on that is almost $1 million. The earnest money deposit is multiple 6 figures. So everything's relative. But you know what, though? That particular property, and I can't wait to celebrate this with you all, too. That's a multiple 7-figure net profit for the investor, whether it's me and or somebody else that jumps in, to build a beautiful estate in one of the most prestigious parts of Southwest Florida there is, that people all across the world travel to. And I'm honored to have the ability to purchase that property and have the ability to bring a developer or builder to that property to go build it and do it together, or have the opportunity to do what I call the hybrid wholesale. Don't even get me started with that one. Hybrid wholesale. Would you like to make maybe 10, 20, 30% of the net profit right away and then earn the rest of it on the back end? Maybe that's a good idea for some of you, right? I can help you, coach you through that too. I've done that on multiple deals. Get like 5, 10, 15 grand on normal size deals. Get 10, 15, 20% on the back end for literally just bringing the deal. Maybe connecting somebody. How about the BRRRR process? Let's talk about that. I bought a property, and my clients are doing this. Rich just said, thank you, Rich. I bought a property, my first rental property. I bought it on my mom's birthday. My mom passed away in 2016. God rest her soul. I miss her every day. May of 2016. It's like, whew, crazy. 7 years ago. It's like 77 years old, lots of challenges. You know, she was just going through so much stuff, and just I was always really close, and I still pray for her every day and feel her spirit around me all the time. But on her birthday, it was coincidental. On her birthday, I bought my first rental property about 5-6 years ago, I think it was, and it was a 2-family in central New Jersey, a place called Boundbrook. So if you want to know like credibility, just in case you haven't felt like that I'm the credible source to help you get there where you want to go, then here's some stories to share with you. So, and I'll wrap this up in about 5 minutes. All right. Bought the property for about $170, $175. My buddy Corey, who also does, what do you think? Auctions. At that time, this was a foreclosure. He had it under contract. He sold me the deal. He made like 10, 15 grand. I bought a property for like 30% of a discount-ish, in that range of what it was going to be worth when it's done. We put about $70K into it. We didn't have to put that much. We did a brand new roof. We did all new reno in the inside of both units, like all new flooring, kitchens. We did the painting, obviously. We did some stuff like systems to kind of fix some things that were messed up. And we did also the front porch had to be completely replaced. That was one of my first like rental property, but also one of my first larger renovation projects too. We ended up renovating for about $70K. The property went to go, we actually got the appraisal for the refinance to do the BRRRR. It appraised lower than I thought it was going to appraise. I was hoping for $350. It appraised at $320. We were all into it for like $260, something like that, $270. So we did okay, but it just seemed like there was still more there after a little while. I owned the property. We were cash flowing like almost $800 a month after everything. And this was when rates, by the way, were about where they're at now, 7%, 6.5%, 7% on 30-year fixed commercial lending. We were still cash flowing, and I kick myself because I should still own that property, by the way. If I knew what I knew now, as I say, I would have still owned that property today. I was making $700 every month cash flow from something I had no money of my own involved in. It was all OPM, and I'm so honored and blessed. And the individual who helped me do that may be hear this message. So I can't say enough good things about that person. I'm not going to say his name, but we have to have a conversation soon because I owe you a lot as far as like what you've helped me do in my life, because you opened up the possibilities, that person that knows who they are. And that property was special because that property kicked me off to a trajectory of not having to worry about stuff I never did before. Because up until that point, we only did wholesale flips, and that's what I was comfortable doing. And then we got into some fix and flips, but it was on a partnership basis, which was great. But then I never had a rental property. It was my first rental, and it was on my mom's birthday nonetheless. And now I'm the buyer. I own the property. And you know what? It was so hard for me a year and a half later to say, let's consider selling it. But I had to do what I felt. And at that time, my mom had already passed away. My mom was passed away a couple of years at that point, prior to. So like I said, this is something in honor for her, but I felt like I should just like keep it, even though there was opportunity there. So what I found was like, I said, let's go put this on the market and let's see what the market says. Just so I get an idea of what it's worth. You know, it just appraised for 320 a few months prior. Maybe I'll get more. Maybe we just stretch the market and see what happens. I put on the market, my buddy Alex worked with us for a while. He still does actually, up in New Jersey, different things. Listed it for 369. You tell me you got a property appraised for 320, you put it up for 360. Yeah, I did that because you know what? Make me an offer. You know, like I'm the seller now. Why do I need to sell this thing? I'm just going to sell it. Maybe, maybe not. I don't want to sell it though. But if you want to buy it, I'll sell it at this price. Okay. Guys, we got multiple offers on like the third day or 2 days, whatever it was. It was like we listed it on like a Thursday or something like that. By the weekend, we had 3 or 4 offers. One was cash. We got an FHA offer for $350. We had a cash offer of like $330. And we had some other conventional offer like 320 or whatever it was, some number. I don't remember because it didn't really matter. It was lower than the other two. I was like, all right, we got what we need. We had 2 offers. We have a competitive bidding situation here. Call for highest and best. Not playing around. When you own property and you have to be motivated to try to sell this because you don't really want to sell it, you're going to just try to get the most for the property. I think that's what anybody would do that's in the business that doesn't necessarily want to sell. I didn't want to sell. I just felt like maybe I should. I could. I ought to, right? Like, okay. You know what happened was it became a highest and best bidding situation. At the end of it, going back and forth, we sold that property to the cash buyer for $376. $376,000 it closed. And this is the first rental property which I was cash flowing $700 to $800 a month. Had just appraised for almost $60,000 less than when I sold it for. And here I am like, this is crazy. But you know what? That property today, just a few years later, you know what it's worth? Probably close to $500,000. You know what that means? It means I lost $120,000 of opportunity of equity that I could have held on to, but I didn't. And that's okay, because you know what? We've made millions of dollars since then as a company, and that's okay, because it's just part of my growth journey. But we all have to grow through these kinds of experiences. If I never bought that property, if you never buy the property you're about to buy next, hopefully with my help, my team's help at the Growth Collective, you're never going to have the experience that you could share with someone around you, that you could learn from, that you could grow from, that you could make money with and add value to your family's financial future and things like that. You just won't have that experience until you just decide to move forward. So decide to make that first step towards that, which is put a deposit. Let's have a conversation. Apply for third party if you need that. It's okay. No judgment. It's there for a reason. It's there for you. But the first thing is make that deposit. Next thing is, let's get scheduled for next week. If you're ready to do this now, let's get you on the calendar for the first session on Monday. Let's get you added to the roster of the clients that join those meetings every week in and out because they know the value of being on those meetings. Let's get you plugged into Slack. Let's get you onboarded with our success manager, Candace. Let's get you plugged into the team. Let's get you connected with Joe and with Coach Rich and Coach David and Coach Kyle. Like, let's get you plugged in. But it's just one thing is in the way of that. It's just seat deposit. And check it out. We'll work together over the next few days to take care of everything else. It's going to work itself out. If it's meant to be, it will be. If it's not, it won't be, and that's okay. We'll still be friends, and you can still use that seat deposit for something else in the future or when you're ready. It's not going to be a loss. We'll still serve you in some capacity. Right? We'll talk about that in private if that's something you're concerned about. The fact is, though, if you're not ready to do what you need to do as far as real estate is concerned, then do something that you're ready to do, like make a decision to join the Growth Collective. Right? Because if you can make that decision, that's just one more decision closer to making the decision to buy the next property or your first property that's going to be done in the next 90 days or less. guaranteed. So listen, I'm here for you. I so appreciate your time today. We went way over our time. I pulled an audible. My team's going to yell at me. I got nothing but love, but I just got to go with the flow. Sometimes I just feel the spirit working through. Just saying somebody out here needs to know this now, that they're just in a place where they just got to get this going. And you're here, and I appreciate you being here, and I'm ready to help you, whoever you are, and hope that, if it's a handful of you, the 6 of you that are here, hearing this message, let's go. I'm ready to help you. Let's go get to work next week. God bless you guys. I appreciate you all. If I don't see you inside the Growth Collective, if I don't talk to you in the next couple of days, we'll see you next Friday at 1 p.m. Have a great weekend.